It's been quite some time since we last talked about Tesla here on this channel, and just as of recently, as of the last couple of days, we have freshly overshot an entry target zone that we had placed in our alternative scenario for Tesla. But as of today, this might already turn into the primary scenario that we now have on the Tesla stock. So today, right here in this video, we're gonna discuss the latest news regarding Tesla, though it has been rather silent regarding that company, and there have been few headlines about Elon Musk lately. And I'm also gonna share our outlook on Tesla right now. Where's the opportunities? Where's the risk? So stick around, we're jumping in right after the intro. Hello and welcome to another video by HKCM Global. My name is Joe, and I don't know about you, but I have gotten rather used to seeing Tesla or Elon Musk headlines every other day throughout 2025. But as of recently, that has somehow stopped. However, that doesn't seem to hurt the stock of Tesla at all. If anything, it even is a supercharger because it is an environment where companies can invest more into developing and into building when they're not in the headlines every single day. So to most investors, it shouldn't come as a surprise that 2025 so far has been a pretty strong year for Tesla. Of course, we flew into this year at super high prices, and we've then seen a rather sharp correction into March. But starting out from those March lows, we have so far seen, up until the current point in time, a 100% rally in Tesla. So super strong performance. Sure, we started the year with a sharp sell-off, but from there onward, great performance. And I'm gonna share with you our alternative scenario and our primary scenario in just a second. We're just gonna dive into a couple of headlines first, because when I prepared for this video, I thought to myself, you know what? I have barely heard anything about Tesla lately, so let's jump right in. One of the most memorable headlines in the last week, for example here, December the 6th, Tesla announces low-cost Model 3 variant in Europe. In a nutshell, Tesla in Europe really is struggling against Chinese rivals. Right now here in the European market, we have a lot of super cheap EVs pushing in from China. Of course, Europe also has protective tariffs on Chinese EVs. However, they still are so cheap and are such great value for the money that Tesla decided to bring in another low-cost variant for their Model 3, especially designed for the European market, which, for example, in Germany is supposed to cost around 38,000 euros, which converts to roughly 44,000 US, which is not even that cheap. I mean, reading that number, I thought to myself, you know what? That's a good price, but it's rather wild, because if you reflect on it, a couple of years back here in Central Europe, you'd be able to buy a brand new Volkswagen Golf for around half of that price. So that then was a real people's car. Right now, having a cheap Model 3 at around 40,000 euros, 45,000 US, I don't know if that is a real people's car yet. And it definitely falls way short of Tesla's long proclaimed goal of building a $25,000 US EV for the mass market. And by the way, speaking about that target that has long been upheld by Tesla and especially Elon Musk has been scraped as of recently. So probably not coming anytime soon, if ever. Also super interesting, Tesla has making progress with their robotaxis. They have been running tests, I believe, for the better part of Q3 and Q4 in Austin, Texas. And they also just freshly started with trials in Arizona. And Elon Musk announced that within the next 3 weeks, so basically within 2025 still, we can expect a full commercial rollout for driverless Tesla taxis, at least in Austin and in some other upcoming US cities. So great news there. I'm definitely looking forward to that, because having affordable and reliable private transportation taxi style just is a complete game changer and total upper in life quality. And lastly, in case you have missed it, just a couple of weeks back, Elon Musk also was on the Joe Rogan podcast and made a wild announcement. In a nutshell, he said that the long prolonged Tesla Roadster is not coming in 2025, but that he is gonna do a huge product reveal on the hugely overhauled Tesla Roadster, probably still within 2025. He didn't make any promises yet, but he said probably before the end of this year. So hopes are high, because he claimed that this would be the most memorable product launch of any product the world has ever seen.
One thing I can guarantee is that this product demo will be unforgettable. unforgettable.
So that's another little event that I'm hugely pumped for. So then, jumping into Tesla, and this time we're gonna switch it around just a little bit because I'm starting off with our Tesla outlook here on the day chart. I also brought for you our 4-hour chart, which is of course going to be more in detail. I'm also going to share here our target zones, but here on the day chart first, to bring you up to date, you can see that our clear primary scenario is another prolonged sell-off into our long-term target zone for the long-term wave 2. So following this blue wave 1 top that we had established in October of 2021, we have concluded that all this price action that we have seen here, even the new all-time high that we saw in December of 2024, all of it has just been corrective sideways action, meaning we need to see another substantial low in the market, which we expect here in this target zone for our final wave 2, somewhere in the area between $46 on the downside and $158 roughly on the upside. Meaning from current levels, we'd be looking at a sell-off of roughly 65-66% to potentially even 80% in the worst case. And I know those are wild claims, especially if analysts out there put huge targets for Tesla in the upcoming year of 2026. However, if you are a viewer to this channel, you are aware that we do not operate on fundamentals and speculations, but we operate on the premise of Elliott Wave counts. And to bring you here up to date, for example, what you can see here, starting off from the high in October of 2025, we have seen a nice correction here in an overreaching A wave. However, Elliott Wave theory makes it clear that every impulsive structure, meaning every structure that forms a substantial and prolonged long-term move in the market, has to consist out of a 5-wave structure with no overlappings in between. And this is where it gets problematic. Because if we look at this fractal here of the WXY structure, I mean, at least what we concluded as a WXY structure here. So starting from the lows of December 2022 up until the high, the all-time high of December 2024. What you can see here is that we have a clear 3-part move. So 1, 2, 3 up internally. So this is concluding then a 1, another wave down here and another wave up here. So 1, 2, 3. And therefore we had concluded back here already that we need to see another sell-off here in Tesla, because this is no impulsive structure. There is no 5-wave structure in here anyways. So for example, if we at least tried to make it work, right? We could maybe try to count a 1, a 2, a 3, a 4, and here already we see problems because the wave 4 hugely overlaps with the wave 1, which is completely not allowed in Elliott Wave theory. Also, if we tried, for example, to count a 1, 2, 3, we again see the same problems here, because this then would need to be a 4, again overlapping with the 1, cannot happen. What else could we do to get really creative? Maybe we could try a 1, 2, 3, 4, again overlapping action here, not holding any extensions or retracement whatsoever. So this structure here just is completely blatantly obvious, a corrective structure in the market, and cannot be an impulsive, therefore no bullish structure. So that's for starters. Therefore we had concluded that all this structure that we have seen here probably in a nutshell is the overreaching first W wave over an overall WXY corrective mode, forming then therefore the overreaching wave 2. So all this action from here onward down to here would be then our wave 2. And as soon as we see the final wave 2 low here in the market, that then is a long-term bottom and would mark the potential starting point for another rally in Tesla. However, you remember in the intro I shared with you that we have had an alternative long zone in Tesla. And this is what I'm going to share with you right now, because this structure here, even though right now in the primary scenario we clearly concluded that this is just an X wave and a wave Y must follow now, what we see then here in this internal structure is the following. And for this we're gonna go over to our 4-hour chart, because it just becomes more clear and apparent here in this time frame. So then this B wave here is our all-time market top in December of 2024. This price action then here is the following low between March to April of 2025. So you remember from the day chart, this low here, which we currently conclude as the bottom of our wave Y, and what followed, which we so far counted in the primary scenario as our X wave, so our connecting wave, which in the primary scenario we counted as our wave X. So wave X always is a short connecting connecting wave between a long and complex wave W and then also rather long and complex wave Y. So wave X, always a short connecting wave. However, what you can see here we already have alternative scenarios on the chart. Why is that? Because in this wave X, what we have seen so far is what we have counted as an W, X, Y internally. However, what we see right here, we already had, as soon as we established this wave AB structure here, we had concluded, you know what, this structure here, all of this price action already bears resemblance of a rather bullish impulsive structure. Therefore, we had concluded, even though we have a clear scenario of another sell-off in a wave 2, we can never be 100% certain in any prediction in the stock market, right? Not us, not the Deutsche Bank, not Morgan Stanley, not BlackRock. Nobody can be 100% confident with their prediction in the stock market. Therefore, we had concluded, overall, we are bullish in Tesla. Yes. Overall, we do believe in Tesla. Yes. Overall, our primary scenario is another sell-off, another substantially deeper sell-off. However, seeing this structure here in the market and concluding that it could be the beginning of an impulsive structure, so the beginning of a real market shift in momentum, we have concluded, you know what, just as a hedge, it might be a good idea to bring a long target zone here in the chart for our alternative scenario. So back then we put our alternative scenario here on the chart at 35% probability that the market could also see a pivot low here and from here onward not march through, not fall through to no lows, but march off to a new all-time high in an alternative wave 5. So in this case, this wave X then would be invalidated and we would see a truncated wave 2 low here in those areas from March to April 2025, and we would see right now the first impulsive structure of the following wave 3. So the bluish wave 3 following this blue wave 2 low in the market. I hope that is clear. So impulsive structure, as mentioned before, always 5 waves, 1 up, 2 down, 3 up, 4 down, 5 up. So this is what we could have seen here in the alternative count. So 1 up, 2 down, 3 up, 4 down, and again no overlapping here with the wave 1. So the exact condition that was not met in all of this price action here, as I just discussed with you in detail. So these exact conditions are met here. And to give you then full transparency here, for this target zone that we had put on the chart, we had clear extensions, and we have this rule of putting our stop loss 1% below the lower threshold of our target zone. And in total, we have seen a drop below our target zone of roughly 1.5%. So if we go by the book, if we go by our own rule book, we have been stopped out here. So this position not existent any longer. So this then, by the way, is the perfect lesson of the difference between your analysis and your portfolio management. Our analysis was clear, right? Primary scenario, another sell-off. However, on the side of portfolio management, we decided that it might be smart to hedge yourself against a potential run-off to new all-time highs with this entry zone here. And then again, on the analysis side, regarding this target zone, we have concluded that the price action must pivot within those retracements that we had established. However, then on the portfolio side, if you decide that you're gonna put a stop loss right at the lower boundary, if you decide that you're gonna put a stop loss 5% below, or whether you decide that you wanna put a stop loss on the next upcoming support here on the downside. So for example, 297.83, or potentially even at this high here at 366.78. That is a question of portfolio management. That is not a question of analysis. So you see the differences here, right? Analysis is one part of the foundation of a healthy portfolio, and portfolio management is the other super essential, crucial part of the foundation of any healthy portfolio. And in this case, for example, analysis was correct, portfolio management was faulty. Some other cases, it's the other way around. So those two always act as a hedge for one another, right? If your analysis is faulty but your portfolio management is on point, you can really reduce your losses. And on the other hand, if your analysis is perfect, however your portfolio management does not work with stop losses or any boundaries whatsoever, you can have a great analysis and also run into huge losses. So those two always have to equal out one another. So today then a bit of a more in-depth video on how our waves count work, how our model portfolio works. Hope you learned something new, and up until then, see you in the next one. Take care.